Hello and welcome. In this video, we will show you how to refinance your mortgage at zero cost to you. That's right, zero. So please stick around till the end of the video for your finance bill of the day. My name is Chakravarti and this is the finance bill. In this video, we're not going to discuss why you should refinance your mortgage, as we're going to assume that you've already used the refinance calculator on our blog and have seen our videos on refinancing. If you haven't, a link to the videos and the calculator is in the description below. It is important that you watch our earlier videos so you get a clear understanding of today's topic. What we are going to show you in this video, however, is the how. Assuming you have a credit score of 720 and above and meet the other basic requirements to refinance, how do you refinance your conventional fixed rate mortgage without paying any closing costs from your pocket while staying under the nation's average interest rate? Well, it might sound impractical to some of you, so we're going to show you exactly how we did it with proof. But first, why is a credit score of 720 or more a requirement? In general, to qualify for a conventional loan, you need a credit score of 640 or more. But a score of 720 plus gives you an upper hand to get the best possible interest rate, as you will be considered an excellent borrower. If your loan to value ratio is above 80%, then you will have to pay the monthly private mortgage insurance, also known as the PMI. And to get the best PMI, you will need a score of 760 or more. In our previous video, we explored the different sections of a conventional loan estimate in detail. In this video, we're going to use a well-negotiated loan estimate that was closed in April 2020, and the borrower in this case is a member of our finance bill team with a credit score of 760. As you can see in the said borrower's loan estimate, the interest rate he received was 3.25%. To confirm that this was below the nation's average rate at that time, here is an image that shows a rate of 3.29% on March 5th, 2020. Let's now shift our focus to the second page of the loan estimate. You can see the origination costs in section A were the ideal zero. In some cases, an origination fee might be acceptable, and we will revisit this at the end of this video. You can also see that the only charge in section B was an appraisal fee of $460. The appraisal was not waived in this case, and the fee had to be paid. As a general practice, most lenders will ask you to pay for the appraisal while your loan application is in process. For your case, you can check with your lender if this appraisal can be waived, and it certainly doesn't hurt to ask because this is usually a yes or no thing and doesn't involve any negotiations. The cost in section C was initially $2,534 from the lender, as you can see on your screen. However, we were able to shop and find a company that offered the exact services for $1,100. In this borrower's case, the quotes received for this section ranged from $1,100 to $2,500. Such a wide range can have a significant impact on the final closing cost if you don't take the time to shop for these services. So, Google and find a few title companies near you and email them asking for quotes. Get the best one possible and send that to your lender. In some cases, the lender might have a deal with the title company whose cost may not easily be beaten, in which case, just go with the lender's preferred title company. The taxes and government fees in section E, which will vary considerably between states, was $40 in this borrower's case. As we discussed in our previous video, we know that we should not consider section F, which contains the prepaids, and section G, which contains the escrow payments, as fees towards refinancing, as these are expenses you would experience irrespective of whether you refinance. Considering this, the total expenses to refinance the mortgage based on the loan estimate for this borrower came to $1,600. Not bad, right? Now, we know what you're thinking. You're thinking, didn't this guy say that he will show me how to refinance without any closing costs? Right? Exactly. This is where this tiny little thing called lender credits come into play. So, what exactly are lender credits? Lender credits are cash credits given by the lender to the borrower to be applied towards the loan's closing costs. Here is what happens when you go to the small or online-only mortgage lenders and they successfully process your loan application. In the background, most of these lenders just turn around and sell your loan for an incentive. Depending on the merit of your loan, which include factors like the credit score, loan to value ratio, and interest rate, this incentive that they receive will vary. The lender in the form of lender credits is simply sharing with you the profit that they will be making when they sell your loan. Again, this lender credit amount does vary on the loan amount and the interest rate and term you end up choosing. What this means is, assuming you have a good credit score, the key here is to choose a lender who is willing to offer you an interest rate that is at par or below the nation's average rate while offering you the maximum lender credit, so you will be incentivized to pick them. Lender credits is one of the main reasons why you should go to small or online only lenders for your refinancing. Big banks may not be able to offer such credits due to their high budget marketing costs and for a few other reasons that we don't want to get into. But equipped with the information in this video and the various results you get from using the refinance calculator on our blog, if you go to the small or online only lenders, they will be more than willing to pass part of their profits to you in the form of lender credits. Because at the end of the day, they want your business. The key here is to find a lender who will share their profits, and to be honest, they are not that hard to find. So in the loan estimate that we are discussing in this video, what were the lender credits? As you see here, it was $4,600. Lender credits is usually a percentage of the loan amount, and in this case it was 1.269% of the loan amount for an interest rate of 3.25% without any loan origination or underwriting fees and without buying any points, of course. So the total expenses were $1,600 and the credit received was $4,600, which means with the additional $3,000, the borrower was able to fund the prepaids and the escrow account, which he otherwise would have had to fund from his own pocket. If, according to the industry experts, lender credits are a trade-off to just slap you with a higher interest rate, how did this borrower get credits worth $4,600 while getting an interest rate of 3.25%, which was below the nation's average rate at that time? We don't mean to make this any more complex, but the buck doesn't stop here. Now, for this borrower's credit score, he was eligible to get an even lower interest rate of 3.125%, but he would have only received $2,100 in lender credits. He would have had to give up $2,500 in cash to go down 1/8%, which would only save him $25 in monthly payments. The break-even period for this $2,500 is 100 months, which is over 8 years. Who knows if he'll keep this loan for 8 years? What if he refinances again in a year or two? That means he threw away money today. What if he has to sell and move in 3 years? Again, he threw away money today by taking 3.125% instead of 3.25%. A break-even period of more than 2 to 3 years is just too long in our opinion. So this borrower decided to take 1/8% in higher interest to get $2,500 more in lender credits. The ultimate goal here is to stay on par or below the nation's average interest rate. Ask your lender what lender credits are available for you for different interest rates. Calculate your break-even period between those rates and pick one that suits you. Also, to give you an idea on what big banks were offering for the same borrower during that time, it was 3.375% with zero lender credits. In fact, they want him to pay an origination fee and buy points as well. Now, you do the math as to why you should find a small or online only lender. If you think this case is just an anomaly or just some stroke of luck, how about we share another real life example? The loan estimate in this case belongs to a friend of ours who lives in the same neighborhood and owns an almost identical home. He was impressed with our refinancing history and asked that we help him. And here is a copy of this friend's loan estimate that was issued in July 2020. The interest rate he was offered was 2.65%, and to confirm that this was below the nation's average rate at that time, please check this image and you will find that it was 2.99% on July 30th, 2020. You can also see that his total cost came to $1,077 and have a look at his lender credits. It was $3,852. So by refinancing his mortgage, in addition to saving tens of thousands of dollars in interest over the period of his mortgage, our friend managed to fund his prepaids and escrow payments. Alternatively, he was offered an even lower interest rate of 2.5% with $1,800 in lender credits. He did his math and decided to go with the 2.625% and $3,852 in lender credits. This is a call that each individual has to make for their own, depending on their plan for their home and their mortgage. And to compare and give you an idea on what the big banks were offering when we logged this offer for our friend, it was 3% interest with zero lender credits, along with an origination fee and around $1,700 in fees to buy points. And obviously there were title fees on top. Now that you're equipped with all this powerful information, what next? We all know knowledge is power. The mortgage industry wants you to buy points and doesn't want you to ask for any lender credits. Let us break the mold and be different. On that thought, here is our finance pill for you today. Put in the work, go shopping and find the best small lenders around you. Or look for online only mortgage lenders that are licensed in your state and make the best ones fight for your business. Start by emailing them. Provide basic information like your home value, loan amount and credit score, and ask the lenders what they can offer you. Once you shortlist a few lenders, submit applications to them. Though each application will result in a hard pull, many FICO algorithms treat mortgage applications submitted within 14 days as a single pull. So make sure you complete your shopping within that time frame. The shortlisted vendors should provide you a formal loan estimate after you submit an application. Narrow down to the ones that offer the best overall deal and have them fight for your business. Yes, it does take some work, especially now with the surge in refinance applications due to historically low rates. But it'll definitely be worth it when you're smiling with all that extra cash and a lower interest rate. Do remember that some of the information in this video might only apply for the specific borrower state. For you, the cost involved might vary based on your individual state, but the basic idea remains the same. Just so you don't feel overwhelmed with all the information in this video, let us summarize it. Assuming you are being offered a rate at par or below the nation's average interest rate, if the total of sections A, B, C and E is greater than the lender credits you receive, then you are paying money from your pocket as fees. But if the total of these sections is less than the lender credits you receive, then frankly, you're sort of getting paid to refinance. It doesn't matter whether the loan origination charge in section A of your loan estimate is zero, as long as the lender credits you receive make up for it. We're not claiming that anyone who sees this video is going to get a deal similar to the two examples we discussed. But what we've shown you here is that it is possible to refinance without any closing costs. Now it's up to you to put in the effort and get it done for yourself. Please like and subscribe if you got value from this video and our finance bill. Don't forget to hit the bell button so you don't miss any of our future videos. Good luck with your refinancing goals. Thank you for watching, and until next time, this was the Finance Bill.